What if your portfolio isn't underperforming, it's just structured wrong? Because top investors don't just pick stocks, they build systems with clear roles.
All right, let's open up the study guide for what feels like the investor's final exam, how to navigate today's pretty chaotic market. We're going to cut through all that noise and figure out how to spot some real opportunities.
So, as an investor today, you're probably up against what some market strategists are calling a trifecta of concerns. And before we can even think about finding the right answers, we've got to get really clear on the problem.
Okay, so what are these three big things? Well, according to the experts, first up, you've got geopolitical conflict, which is creating a ton of headline risk. Second, there are these big questions swirling around the private credit market. You know, all that lending that's happening outside of the usual banks. And third, of course, is the massive, game-changing force of AI, which is basically rewriting the rules for everyone, especially in tech.
So, what's the first rule for acing this test? It's all about focusing on the fundamentals. Now, that sounds super simple, right? But it really means learning to look past the dramatic, flashy headlines to see what's actually powering the market underneath.
It is so tempting to react to every single piece of breaking news, but here's the real test. Does that piece of news actually change a company's ability to make money? You know, their earnings? Most of the time, if we're being honest, the answer is no.
And this is why rule number one is so critical right now. Because while the headlines might be full of doom and gloom, the actual numbers, the fundamentals, are telling a completely different and frankly, a surprisingly strong story. In fact, just look at this. The early reports from this earnings season, they're showing powerful year-over-year growth of around 30%. And it's not just that. Top-line revenue is also coming in better than expected. I mean, that is a really powerful signal about the real health of the economy.
So the big takeaway here is that the data underneath it all suggests the economy's foundation isn't actually collapsing. And whenever you get this kind of disconnect between scary headlines and strong fundamentals, it creates what experts call pockets of opportunity for investors who are willing to do their homework.
Okay, let's move on to our second rule, and you'll see how this builds. Once you're focused on the right things, the fundamentals, the next step is to look just under the surface of the market and understand the major splits, or what we call divergences, that are happening.
And a textbook example of this is happening inside the tech sector right now. There is this huge, clear-as-day split between the companies that make the hardware, the actual physical chips and servers, and the companies that write the software.
And what's the engine driving this massive split? Well, you guessed it. It's the single biggest theme in the market today: artificial intelligence. But what's so fascinating is how AI is creating two totally different stories for these two sides of the tech world.
So let's apply our rules to this real-world case study. On one side, you have an absolute hardware boom. And on the other, you've got what some people are calling a SaaS apocalypse, this potential crisis for all those software-as-a-service companies.
Here's the breakdown. For hardware companies, AI is pure rocket fuel. They are the supply side. They're building the infrastructure for this whole AI revolution, and the demand seems completely and totally insatiable. For software companies, though, AI is a source of fear. The big risk is that AI could just completely blow up their existing business models.
And this just illustrates the point perfectly. The Philly Semiconductor Index, which is a really important benchmark for chip makers, just recently went on a tear, a record-breaking 17 straight days of gains. That's a huge signal of just how powerful this whole AI build-out is. And the market sentiment here? It is crystal clear. You don't need to be a chart wizard to see this. Investors are incredibly optimistic about hardware's future, pricing it for near perfection. At the same time, they are deeply pessimistic about software, pricing it for a major disaster.
So this brings us to the final exam question, doesn't it? You see this massive divergence, you've seen the data, so where is the real long-term opportunity actually hiding?
Now, at first glance, the answer seems totally obvious, right? Just buy the strong sector, hardware, and stay away from the weak one, software. But this is where passing the test gets a little tricky, because the truly compelling argument is a fascinating and completely counterintuitive one. And here it is, the big pivot. The argument is that the true opportunity might be hiding in plain sight, in the one area everyone is the most fearful of, the beaten-down, deeply unpopular software sector.
This is a classic contrarian investment idea. The thinking is that the price move in software stocks has been so severe that it's basically pricing in a worst-case scenario. But what if not every single software business gets disrupted to the degree that the market is fearing? That gap right there, between the fear and the reality, that's where the opportunity is. So here it is, your key takeaway for the exam. This is the playbook. First, you find a sector where the prices move dramatically because of one single story. Second, you have to critically question if that popular story is maybe being a little overblown. And third, that's how you find it. The opportunity where fear has pushed prices way below what the actual long-term fundamentals suggest.
And that leaves us with one final thought to take with you. The SaaS apocalypse is just one example of a really powerful fear-based story. The real final exam question for any investor is this: where else in the market is a similar story creating a potential opening for those who choose to focus on the numbers instead of the noise?
The real question isn't what you own, it's why you own it. Subscribe if you want smarter portfolio strategies, not random picks.